If you've ever searched for ways to invest, build wealth, or participate in the financial markets, you've probably come across Forex trading. Millions of people around the world trade currencies every day, making Forex the largest financial market on the planet. But for beginners, Forex can seem overwhelming. There are charts, brokers, trading platforms, technical indicators, economic news, and countless opinions about how the market works. The good news is that you don't need to learn everything at once. Like any professional skill, trading can be learned step by step. The goal of this video is to give you a solid foundation and help you understand how the Forex market actually works. By the end of this video, you'll understand what Forex really is, what assets can be traded, how currency pairs work, how brokers operate, the essential trading terminology every beginner should know, and who the major participants in the market are. Whether you're simply curious about Forex or considering becoming a trader yourself, this video will help you start with the right mindset and realistic expectations. Let's begin with the most basic question. What exactly is Forex? Forex stands for Foreign Exchange Market. It is the global marketplace where currencies are exchanged and traded against one another. Every day, governments, banks, multinational corporations, investment funds, and retail traders participate in this market. Forex is the largest financial market in the world. Its daily trading volume exceeds $6 trillion, making it significantly larger than the stock market. One of the unique features of Forex is that it operates almost continuously. The market is open 24 hours a day, 5 days a week, allowing traders from different parts of the world to participate whenever their trading session is active. Another reason Forex is so popular is liquidity. Because so many participants are constantly buying and selling, traders can usually enter and exit positions quickly and efficiently. However, before you get excited about the opportunities, there is something important you need to understand. Forex is not a shortcut to wealth. The traders who survive in this business are usually the ones who focus on education, discipline, and risk management rather than chasing quick profits. Now, let's look at what can actually be traded. One of the biggest misconceptions about Forex is that traders only buy and sell currencies. While currencies are the foundation of the Forex market, most modern brokers offer access to many different financial instruments. These include major currency pairs such as Euro-USD, precious metals such as gold and silver, energy products including crude oil and natural gas, stock indices such as the S&P 500, NASDAQ, and Dow Jones, and even agricultural commodities such as coffee, wheat, and corn. Many traders focus exclusively on one market. Some trade only gold. Others trade only stock indices, and some specialize in major currency pairs. In most cases, these instruments are traded through CFDs, or contracts for difference. This means you don't actually own the underlying asset. Instead, you speculate on whether the price will move up or down. Now, let's talk about the foundation of Forex trading itself. Currency pairs. Currencies are always traded in pairs. When you buy one currency, you're simultaneously selling another. For example, if Euro-USD is trading at 1.1000, it means 1 euro is worth $1.10. If the price rises, the euro is gaining strength relative to the US dollar. If the price falls, the dollar is gaining strength relative to the euro. Some currency pairs are much more popular than others. The most heavily traded currency pair in the world is Euro-USD. Together, these major pairs account for the majority of global Forex trading volume. For beginners, Euro-USD is often the best place to start because it offers high liquidity, relatively low trading costs, and a huge amount of educational material. Now that we know what we're trading, let's talk about how we actually access the market. Retail traders cannot directly access the global interbank market. Instead, they access the market through a broker. A broker acts as the bridge between you and the financial markets. The broker provides A trading platform such as MetaTrader 4 or MetaTrader 5. Live market prices. Order execution. Account management. And in many cases, access to leverage. Choosing the right broker is important. When evaluating a broker, consider regulation, trading costs, deposit and withdrawal methods, platform reliability, and customer support. Before risking real money, there is one step every beginner should take. Open a demo account. A demo account allows you to trade real market conditions using virtual money. This gives you an opportunity to learn the platform and practice trading without risking your capital. The goal of a demo account is not to make fake profits. The goal is to build good habits. Now let's learn the language of trading. Before placing your first trade, there are a few important concepts you must understand. What is a pip? A pip is the smallest standard price movement in most currency pairs. For example, if Euro-USD moves from 1.1000 to 1.1001, it has moved 1 pip. If it moves from 1.1000 to 1.1010, it has moved 10 pips. Profits and losses in Forex are often measured in pips. What is a lot? A lot represents the size of your trade. The most common lot sizes are standard lot, 100,000 units, mini lot, 10,000 units, micro lot, 1,000 units, nano lot, 100 units. The larger the lot size, the larger the potential profit and loss. For most beginners, micro lots are usually the safest starting point. What is the spread? Whenever you look at a trading platform, you will notice two prices, a buying price and a selling price. The difference between them is called the spread. The spread is one of the costs of trading. In practical terms, every trade begins with a small loss equal to the spread. What is leverage? Leverage allows you to control a larger position with a smaller amount of capital. For example, if you have $100 and use 100-to-1 leverage, you can control a position worth $10,000. This increases both potential profits and potential losses. Many beginners focus only on the profit side of leverage. Professional traders focus on the risk side. Leverage is a tool. Used correctly, it can help. Used incorrectly, it can destroy an account very quickly. Now that you understand the basic language of trading, let's talk about who actually moves the market. One of the biggest mistakes beginners make is believing that retail traders move the market. The reality is very different. The largest participants in Forex are central banks. Institutions such as the Federal Reserve, the European Central Bank, and the Bank of Japan can move markets significantly through interest rate decisions and monetary policy. Next come major commercial and investment banks. These institutions process enormous amounts of currency transactions every day. And finally, we have retail traders, people like you and me. Although retail traders represent a large number of participants, their combined trading volume is relatively small compared to institutions. This leads to one of the most important lessons in trading. Retail traders do not move the market. Our job is not to fight the institutions. Our job is to identify where the major players are positioning themselves and align ourselves with the dominant market direction. The sooner you stop trying to outsmart the market and start learning how it actually works, the faster your trading journey will improve. In this first part, we've covered the foundations of Forex trading. You now understand what Forex is, what assets can be traded, how currency pairs work, how brokers operate, the essential language of trading, and who actually moves the market. In Part 2, we'll dive deeper into technical analysis, chart reading, indicators, risk management, and the trading styles used by professional traders. Thank you for watching, and I'll see you in the next video.